Hey everybody, welcome back. Happy Friday to each of you. It's good to be here with you. My name is Mike Fairborn and here for our ThinkScript and ThinkScripting class. Folks, today I did want to take a look at some of our prior indicators that we have looked at in the past, namely the TTM squeeze. I wanted to see what has been happening with that indicator. There has been some interesting indications in terms of stocks that might be ready for a possibility of a change in trend or a continuation of trend with that. So I wanted to review what that's been doing because as we develop these indicators, we still want to look back and see which of those might be timely right now in market situations. In addition to that, I want to talk a bit today about the advanced decline line. What can be done with the advanced decline line and what can't be done in terms of scans, but what can be done in terms of charts with that. So there's a distinction there specifically within ThinkScript for those. Wanted to also mention that there had been some requests about some divergences as it does relate to volume. So have got a scan as it relates to that I wanted to address with you all today. But looking forward to getting going on it today. And hello to each of you. Hello to you, Luke, as well as others we've got here. High Speed, Melissa, welcome. We've got Crispy, Rocky, Riceberg, Scott, Thea, David, Danny from Cali, as well as Kelly. All right. Well, joining the chat by a good friend, colleague of mine, Cameron May, as well. So, folks, you can join us both on X. It's important to remember to get the wording right. Cameron May, CS at the end, spelled exactly as Cameron has noted it here. In fact, he's pinned it to the top as well. Mine as well, Mike Fairborn CS, because we do have some imposters out there. But if you'd like to follow us directly, love to have you on board. Encourage you to do so. But it has to be exactly that handle there, or each of those handles. So let's get rolling. Hello to you, Bill, just joining us. Let's start off with some disclosures, folks, to get the show on the road. Information here is for general information purposes only and should not be considered an individualized recommendation. The paper money software application is for educational purposes only. Investing does involve risk, including for some products more than your initial investment. Past performance of any security strategy does not guarantee future results or success. Okay, now, as it states here, we do reference futures, that we do reference the futures charts, and because we do reference those, futures and futures options trading does involve substantial risk. It is not suitable for all investors. There are some disclosure statements for that listed below and some notes there as well, as a side note. All right, real quick, folks, steps to ThinkScripting. Now, we've talked about this plenty of times, but if you are new within this class, we do use, when we talk about scripts, what we're actually referring to is the actual code that we're plugging into the Thinkorswim platform to help us either develop, let's say, for example, today, a custom indicator. We're also creating custom scans. That can be really, really useful because it's outside the normal range of what is on the platform or what has been developed. It puts that in our corner where we can develop some code ourselves to make things a little bit more efficient. Maybe find an indicator that's of interest to us, and we can quickly scan or use customized columns to find what we're after very quickly. And one thing we have been talking about recently is using specific indicators that we know are of interest to us. Let's say, for example, we like that indicator, and then asking ourselves, can ThinkScripting meet that goal? In a lot of cases, it can. I'm going to mention a distinction today on the advanced decline line when it comes to scans, but it can meet our goals on charts. Almost always, if you're going to get an indicator, you're going to be able to use it on, let's say, for scanning or custom charts, or, if not those, if we can pull that indicator, we can probably do something on charts with it. And so we're going to talk about that today, specifically as it relates to divergence. We've got a little bit of a code here to look at, but it's going to be really quite cool. And I have to say, Thea was the one who planted this in my mind in terms of maybe an advanced decline line, because we talk about that a lot in my Wednesday class of markets and sectors, which is, by the way, been moved 1 hour later. So it's at the end of the day, which makes sense because we're going to be looking at sectors and markets at the end of the day. But divergence, how is the advancers versus decliners doing relative to, let's say, the S&P 500? It's fascinating. We're going to take a look at that. We can't put it in a scan because Thinkorswim does not allow it. At least that's what I ran into over and over again as I was trying to do it. But more on that in a bit. And then in addition, we will be looking at the Chaikin money flow, which is a combination of both momentum and volume in terms of money flow, what it looks at. We're going to break that down and discuss that too. So great to have you all on board. Looking forward to getting going here. But oh yeah, that's what we're doing today, though. I think did you pick up on that, Thea? And others, I'm seeing that question in, but I think we actually addressed it right on time. Again, folks, as always, at the end, we do have a little dessert for you. Let's say the dessert would be we share that ThinkScript link so that you can use it yourself, or maybe even adjust it. And I know many of you do adjust it to tailor it to exactly what you want to see on the Thinkorswim platform. That's one of the real, sort of powerful elements that the platform can provide us. And so love to do that at the end. Okay, well, let's go through that. We'll talk about the code as well. But let's start off here with the markets. So I'm going to kind of shut this down. We'll pull this up and, let's just drag this up. And by the way, I'm going to drag up, I sent a little tweet out on this, or X post, I guess what they're called now. If you look at the volume profile, just as a quick note, because I have it up here, you might find it interesting, and I discussed this in the markets and sectors class as well, but you can see up top here, that is the point of control. That is the absolute highest volume. I'm not seeing that too great with my blue line on top of the kind of blue color there. But you can see up top here, that is the point of control. That is the highest volume traded over the last 9 months. And I would say that's relatively important because that's where the price of the ES, or the S&P 500, has been trading. We're using the ES so we can get that volume read. We got volume down here, which is just a beautiful thing with futures. This is still based upon the same 500 list of companies, but interesting. You get above it, close above it, it could be support. You get below it, or we have been staying below it. In fact, you can see that right here. We've been holding below it for quite some time. It can be a bit challenging. As they like to say out here sometimes, tough sledding, right? It's tough to get through that level because there's just a lot of buying and selling activity. In other words, that volume profile that we have up here, folks, it converts all this trading and says, well, hey, what price did the majority of these trades come in at? I'll tell you where they came in at right there. That can represent significant resistance if you're not there, or significant support if you happen to be above it. However, I would say these spikes, we got another doozy right there. We'll just call it a doozy because that's a lot of buying and selling. And guess what that ties into? A little bit of resistance up top here. Just a little side note. It's kind of interesting. One quick note that somebody did respond back on my X post and just said, hey, what I'm saying on this is that if we did start to break down, there's not a lot of potential support coming down here too, which could technically be true over that 9-month time frame. So, and by the way, that is one way for me to get to know you and know that you are following me, because Cameron has a lot more followers than I do, but on X we do know who you are, and we can follow you back if you do post back into X. So we know that you're following us. All right. With that, though, we've got other things to discuss in this class, don't we? How about some ThinkScript? Quick note before we dive into that, just heading back to the S&P 500. I did mention, and we've talked about this before, but specifically as it ties into the TTM squeeze. We're going to kill that RSI just for now. All right, there we go. It's gone. We're going to take out the money flow. We're not seeing money flow here because there is no volume on the SPX. I'm going to jump this up to a 1 year so we can kind of adjust our chart to what we want to look at here. I'm going to be looking at other stocks, but you guys remember, we'll pull up Apple just to get us rolling here, but we do have a TTM squeeze. Bollinger Band fitting inside the Keltner channels, TTM squeeze. There it is. We're just looking at the indicator itself, representing extreme levels of volatility compression. So think of the price bars, folks. Very, very, very small relative to what they have been over the past month, basically. We're looking at 20 days right there. But that's what we're referencing here when we look at that. So I'm just going to throw it out here. We'll cancel that and just add that guy on. Click, click. And there we go. This is one that we had done in the past. One of the ThinkScripts. We'll do more as we learn more and find out different ways to utilize this code. Different things will pop up. But I'm going to go up top here and just make a quick adjustment. We're going to go into that TTM squeeze where we're just seeing what we want to see. And that is let's kill this right here. The histogram I'm not really interested in right now. I just want to show you that, hey, we have normal volatility conditions, Bollinger Band outside Keltner channel right here when it's green. But when it is red, the way I've designed it here, that's when compression is taking place. I'm going to show you a couple that we've just seen recently because we're tapping into some of these right here. That is VMC. You'll notice what happened. We did get compression. Here's a one-year chart, but as we zoom in on it, you'll see compression. Remember, what we mean by that is just a tightening of the range of those bars. And so they're getting just smaller and smaller. And a lot of times what that happens is you're getting that compression. They're kind of getting wound up or coiled up. And then boom, you can start to take off again. And that might be an earnings event that kicks that into gear too. But you'll notice that we actually got this. It appears. No, it was on earnings. Okay, sometimes it'll go right before earnings. But there's your little flag pattern breakout, right? Look at this VMC again. Do you guys notice anything here? Because we've discussed flag patterns here for sure, but there's a little flag. What about this as maybe a little bit of a longer term sort of a flag setup? Look at this big move up, consolidation. And what do we like to see on consolidation? Generally speaking, you don't like to see the big bars. I mean, we got one in there, which was no good, but we got this too. When you get that tight range, it just means a lack of interest in what? What's the trend been doing? It's been selling off. So perhaps lack of interest in selling, and that's what that lines up with right down through here. Do you notice that also corresponds with the possibility of a flag pattern right there? Maybe the flag is developing, because what do we expect to see outside of the flag? What did we see over here when this flag stopped developing? We went back to green. In other words, we went back to normal volatility conditions, which can be fascinating because these two tie in together. So we're not only just seeing compression maybe undo itself in an expansion, but it's coming maybe at an interesting time. I'll put a check mark there, but I've got to put a question mark because we don't know if that'll happen. But hey, materials are interesting with some of the tariffs and some of the money coming back into the U.S., perhaps more manufacturing. You know, that's one area that, I don't know, in terms of a macro trend, I'm kind of looking at. I mean, well, just generally, I think a lot of people are, because economists are talking about that, right? Industrials has been strong, and some of the materials sectors have as well. Material industries specifically, but materials itself is a sector. Let's hit some more here. We're going to go straight from materials to, my goodness, burritos or tacos or whatever it is. CMG. That's a transition, folks. There you go. Oh, okay. We were in a pretty decent squeeze there. How many bars was that? It was a few, and believe it or not, I can use a tool right here, right off the Thinkorswim platform. I'm going to click on these bars and tell you how long, if I put it in the right spot, how long we were in that squeeze. We were in that squeeze about 11 bars, and that's plenty. We just came out of it right now. Do you notice anything that occurred as we just came out of it? Can anybody tell me? I just want to make sure you guys are looking at the charts with me too, because I mean, we want to correlate this to potentially what's happening on the charts. Now that I raised that up, I've messed up that line. But what do you see that could be correlating with that? Because remember, we're looking at potential coiling of price action. And is that not exactly what we saw right there? Flag pattern. Big bar. Chris, you got it. Anything else besides the big bar? You got it, though. I mean, you're absolutely right. Riceberg. Yes. Big bar. Breakout. I'll combine what you guys just said together right there. We've been stuck in this range for a while, and I'm telling you right here, resistance, 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 and boom. We're above that now, right? We might hold that as support. In fact, if you can hold that as support, that's what a lot of traders, investors will look for, is right there. I mean, what is that? That's another potential flag pattern. So something could be happening here with Mexican food. This, whatever it is. Hey, it's interesting, and it's just fascinating. So keep a watch. I mean, we discussed this, and I think it's a good use of our time to also go and hit some of these areas that have been showing signs of indications of a potential bounce. Now, just for the heck of it, and just for this class, what I'm going to do on that CMG, they had a reverse split a long time ago, didn't they? Oh gosh, yes, right there. 50, 50 to 1. I was going to say this was like way expensive, but now it's a little cheaper. I mean, 50 to 1 price split. So we were up in the, safe to say, higher levels. Let's go ahead and just put a trade on here as a breakout trade combined with the potential expansion of volatility now. Again, folks, totally different indicator than what we're seeing on the charts, but we're still going to utilize it, right? Could be. So let's just put one on so we could just kind of track it from week to week. It could be interesting. Beautiful spread there. Look at that. A penny wide spread. Beautiful. Volume, 5 million. You love that even on a Friday. Oftentimes volume can be slow on a Friday, but let's just put an OCO in here. And I'll give you a sense of where we might draw this out. I'm going to send this in just for 100 shares, just to get one under our belt, something that lines up with the script that we've done in the past. And right there, and let's go ahead and just take a look at this because it's drawn in some lines here for us. You got targets, you got stops. We can set, there's just a number of different ways to set a potential stop order. And remember, again, a stop order is not guaranteed to execute. It just goes out once it's triggered. It competes with other existing market orders. Okay, so depending upon where you want to put that stop up, it could be referencing where it could be in reference to how high you think it's going to go to, referencing, balancing risk and return. I'm just going to set this just here for now. We're not going to get too deep into the weeds on this. I just wanted to put one under our belt. But if I'm looking at the possibility of a target, quick note, possible shoulder head, that's a two-headed beast right there, 1 and 2. Inverted, that is, shoulder head, shoulder. You know what? We can use that neckline right there as a guide for how high this could go. This is about 45. I'm just eyeballing it, folks, here for now, but that's 45. We broke above there. Let's see, 45, 46, 47. Okay, so 45 really to 52 is that range, right? So we're looking at 7 points there. So if we add another 7 points to what we've got up top here, what are we looking at? Around, well, 59-ish or so. Ooh, little resistance level. I'm going to go ahead and just drag this guy right now up to that top in terms of a potential target here for us. We're just using the full, well, I went right to 59. That's rare. I hit that number, I think, right on the money. But anyways, we're just getting a general idea of what we might look here for if it were to break out. But there you go. So kind of built behind the scenes, we're using a ThinkScript to maybe help us out. By the way, I'll just say this. That's how I found this, was through the ThinkScript itself. Now, you guys can access these if you're interested. There's my good friend, and from past days as well, Ken Rose, but I'm up here at the top. I'm just going to throw this in. Last week, we talked about the cluster. If you haven't looked at the cluster, it could be interesting. That is just an exclusive indicator that we do look at. This will help you spot those in a market watch column, that is. I'll put this in if you guys are interested, but that is the playlist right there. I posted it in the chat for you. Okay, we all set here. Looks like, yep, we might be. All right, there you have it. Okay, well, let's go ahead and continue on, shall we? All right, so that's a few of those to look at. Now, I wanted to also point out that we had, and by the way, there are a few of these. I'm just going to highlight them very, very quickly. Here's Bax. Baxter just came off of one. You guys seeing the possibility of a flag there? By the way, something interesting with Bax as well. What do we have with Bax? Well, it's a healthcare company, and healthcare is defensive, a little bit more defensive in nature. LH, we're staying with that group, and look at LH just coming out of the squeeze right there. It's not cheap. It's $250 a share, but you see a potential flag there, question mark. We're finding these just through the squeeze, And here's, okay, we'll kind of finish up on this one. This one, it's rare to see this, but look how long this was in the squeeze. I tell you guys, you've seen them too. I know you've seen them all like me, but there you go. That's 27 bars. 27 bars into a tight squeeze. Whoa. That does happen. Last time we had that, remember, these squeezes don't mean upside or downside. They can mean either one. Look at this squeeze that you had at the top. What happened afterwards? Did prices expand? Oh yeah. I would say, namely, with this gigantic gap right there. Now, by the way, you guys, a quick note on the gap. What do you think about when you see a gap like that? First thing that comes to me is be careful, because that gap is big. And what the heck did they say? It seems like this balanced out over here, and we're coming out of a compression range, which is fascinating. After 27 bars, right there, that was a course correction in my arrow right there. But you can see right there, just today. And isn't it interesting how we're coming out right now? And that also shows that we're just today breaking above that range. Interesting. I mean, hey, if nothing else, keep a watch on it. Maybe there's a longer term bottom at play here. There's a weekly chart just to glance at. This stock has longer term bottoms when it goes, and we don't know if it'll be a longer term bottom because there's no indicator that it's perfect, but it's a combination of combining some things together. By the way, Mark says earnings gap. Exactly. It is an earnings gap, Mark. And by the way, Mark and everybody, I want to know what the heck they announced, because I want to make sure these guys, to be honest with you, are out of the woods. That's a big gap. I don't want to see another big gap like that again. We're coming down to a level where this stock has been around a few times. There is a big round number in here. The double century mark. There you go, 200. Did we consolidate near 200? We absolutely did, and we see that a lot. It doesn't happen every time, but it can mean big support if you're above it, big resistance if you're below it. But how are things going? Go back here and check out, I don't know, check out what was going on, the news or whatever, it was news. But what on earth happened there? And go from there. But I'm just saying there's a lot that we're picking up on here just by looking at the squeeze here and going back, taking a look at things. All right. Well, I'll tell you what, we had a discussion earlier this week, and we'd done a few, hadn't we? We'd done a few classes on the MF, and that would be the market forecast for short. It's a big word. Market forecast, it's a proprietary indicator. We looked at longer term changes and divergence. We looked at the clusters last week. You guys probably had enough of the MF indicator for now, the market forecast indicator. And maybe it is because those are my initials too. Did I stick with it longer because I just like the sound of it? I don't know. But we got through it, and then I picked up some comments. I thought they had a very interesting comment. It says, hey, can we move on to maybe, this? And I'm just going to show you guys what I take a look at in my markets and sectors class right here. By the way, this class, remember, next week, we are moving over to Thursday. Okay, so just be mindful of that. It's not going to be a Friday class, just a day ahead for the ThinkScript class. Okay, well, this is what we were looking at. And we said over here, see, this is the advanced decline line. Now, the advanced decline line is just what it says. What are the advancers? What are the decliners? Right now, we're using an NYSE chart. And it's fascinating because this is really a breadth indicator. Believe me, if we're using the NYSE, right, breadth of the market. And if you're getting breadth in the market, you're getting a fair number of stocks that are showing strength as opposed to a smaller basket. Because this, I'll tell you what, the NYSE is 2.7K, 2.7 thousand, 2,700 plus stocks. And when you get that, you can get interesting indications that maybe the trend is ready to turn. So we've got an indicator here. I'm going to just jump back. That's kind of the brainchild for it, though, to a degree. But let's jump back to it. Just do our daily chart. We'll still keep up the SPX, because this could be really helpful to say, are market conditions going to be strong or are they going to be weak? We saw the volume profile previously, and there could be weakness with the volume profile here. We don't know what it's going to do at this level. There could also be strength. But if we put in this indicator, let's see, AD divergence. What I'm looking for here is advanced decline line divergence. What do I mean by that? I've got it written out here in the script. I tried to put the words in here specifically. What are the bearish conditions? What are the bullish conditions? Bearish first, and we've talked about this code at pretty much great length specifically previously, but price making higher highs and AD line not confirming. What could that tell us? That's going to be a negative breadth indication. So negative B for breadth, okay? Down over here, okay, we've got a bullish divergence. AD line making higher highs. In other words, we're getting breadth indications. And what's fascinating about this indicator, folks, is it's not like so many other indicators that are in fact lagging indicators that take information from price data. A lot of indicators are lagging, moving averages, stochastics. I mean, just the bulk of them take data from price action, open, high, low, and close, and give us a lagging indicator. Now, they can still be useful, but this is oftentimes a leading indicator. If it shows strength, if we're getting bullish divergence signs, okay, or bearish, we could see price strength on the near horizon, or price weakness on the near horizon. Let's go ahead and get this guy going right now so we can take a look at it. And this is it. So it's just a cool one to do this on. And what I've done here, I've just put in arrows. The green arrows are simply just, and you guys, we can expand these too if you want to see them bigger. But there are your arrows. We're seeing positive divergence. Look at this on some of these off the bottom. And this was a very interesting day. The next day was a recovery, but the vast majority of NYSE stocks, they were up. Not necessarily the vast majority, but more advancers than decliners. I'm going to go ahead and put that AD line on here so you can see it, or the advanced decline line. So let's take a look at both. This is what the indicator can show us. And those arrows are just going to help us really spot these quickly. I'm going to remove this guy for now. That's the AD line. You'll notice the AD line, folks. Look over here with me. Collectively, what were we getting over here? AD line breaking above highs before we actually broke out, relative on price. And you get this a lot with even stocks. You can use this for stocks too, but it's whatever, company we're looking at here. This is the S&P 500, but that's what's going to put the arrows on here. Is it trading up? And let's say in this case, with the red arrow, the AD line is trading down. We had a few of these. Look at this. The AD line, down, 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 down. We're making new highs on the SPX, but AD line is not making new highs yet. It's getting close, but not quite there. But that's kind of like a confluence of negative divergence you're seeing here. Breadth of stocks, the number of advancers, decliners in that NYSE is showing they're going down, and to go higher, just to recap this again, in many cases, you want to have that breadth of the market. You want to have a number of stocks going up. All right. We're going to choose another one here in terms of just stocks that we can look at. But by the way, a quick note too, we're looking at NYSE. This can be changed as part of the indicator itself. I'll show you where. If we don't want to look at NYSE, we can use also oh, no, you know what? I built this specifically around the NYSE, and that I think is the general way to use it. But there is also the NASDAQ. We use it against the NASDAQ. We could use it against the Amex as well, because they do have advanced decline lines for each of those. Unfortunately, though, we can't use this as a scan because it's an index related tool. And so it's not like a custom type indicator. It's different. It's up top here. I'll show you. It's in... yeah, like these indicators up top, and Thinkorswim, in terms of the scan or the custom columns, will not recognize it. I have not found a way. If anybody knows how, I would love to turn this into a scan. So I always like to throw that out to you guys, because sometimes, I get a lot of times really good feedback. So I wanted to throw that out there. Before I go on from the SPX, though, look over here with me, right there. That's a bullish indication. So we were consolidating here, and we broke out. Look at good solid momentum there on that advanced decline line. You can choose this on stocks as well, though. It could be interesting, but it's a cool little guide to have. Let's do something even. I'm just going to go out here like Boeing, for example. You can see what that have been showing at different cases. I think it's more relevant to the market. But yeah, you see, gosh, a lot of divergence up here around those pulling back. Let me take a look at Meta. There we go. So off the bottom as well. Interesting. A lot of these flags, you get it right towards the end. You notice that? Look at this. And I noticed this too going through, but right over here, the breadth started to kick in gear. A number were really starting to move higher relative to the SPX. Or yeah, relative to the NYSE, I'm sorry. So check these out on those flag pullbacks. It was a cool topic request, so I appreciate that coming through. Again, we built that as an indicator, but that's about it. Couldn't go any further, but hey, we'll take what we can get here, right? We will. Use these as sort of indications. You can use it for however you want, but maybe possible bottom indications. What are the bulk of stocks doing? Bottom, bottom, bottom. We can go over here. Look at these bottoms over here. Although prices were going down, that was a bottom as well. Right at the end of this potential flag pattern before a big move up, I'm looking at that. I did put negative and positive in here because I'll tell you something right now. You know, when you're looking at an entire group of NYSE companies, there's going to be certainly variation when you compare that with the Meta. But still, that can let you know what was breadth doing on the day. That's what we're really focused in on here. All right. So we got that. We got the advanced decline line. We looked at the TTM squeeze. Some other requests we were looking at. Specifically, there was a request on, I'll kill this. Oh, let's share it. Let's get this in. We'll go ahead and get this out now. In fact, I'll just hit share here. So put this right into the box. There are a lot of false signals for sure. So, but remember, the advanced decline line it more closely aligns with the S&P 500. Although I just wanted to say, if you were looking at a pullback on a stock and you thought it might be a flag pattern or whatever the case is, yeah, there could be some indications over here. As a matter of fact, if we were to take out just the bearish indication, just take out the bearish and just leave the bullish, there'd be a lot less indications here. And that could give you a breadth read for markets. All right, but there are a lot of indications here. You're going to get that with like Meta is a lot different from the NYSE combined together. All right, so let's do that. You got to kind of put it in context for sure. All right, yeah. All righty. Well, let's get back. I'm going to pull up just a regular chart with some of our other indicators in here. Folks, we had looked at say, for example, MSFT. We'll take a look at Microsoft over here. We've used other indicators. We've used divergences. We've used money flow. The Chaikin money flow is unique because it uses basically the two indicators that, I don't know, I think a lot of traders use. You guys have seen these on my charts. But there you go in terms of the Chaikin money flow. It combines actually RSI components with on balance volume or, money flow type characteristics. It's the combination of the two. So you're getting kind of a momentum indication behind the scenes as well. I'm going to clear these off. Well, let's keep them on so we can have all three together in here, okay? So here we go. Let's go ahead and pull it up right now. We're going to just check it out, read about it a little bit. There is the Chaikin money flow. We're looking at a positive divergence here. So when the Chaikin money flow is showing strength and prices aren't, we could be looking at a leading indicator. That's what we get with volume. Volume can be a leading indicator, but so too can, momentum. Like people look at divergences with RSI. So we're just looking at the combination of the two. We haven't looked at Chaikin money flow in that sense. This is from a guy by the name of Mark Chaikin. I'm going to pull it up right now and we'll just read through it briefly here and take a quick peek at it. Okay. I hope we can load it up. Well, okay. I'll tell you what, we will add it in. And then, it's so funny because sometimes when I'm presenting, it'll just add it up. It'll throw it up really quick. They're always good to read. And hey, a lot of times when I'm presenting, it doesn't want to do it. So there you go. That's the Chaikin money flow, though. Let's take a look at it right now, breaking it down. Now, the inputs over a period of time are a little bit different. Remember, the RSI is 21. right? We're not seeing everything going on behind the scenes in here, but you're getting an indication of, okay, so we've got, yeah, we've got volume, we've got close, we've got a read on the close in here, close minus the low, minus the high, minus the close, divided by the high minus the low times volume. So that is the definition of how he has decided to use it. That is Marc Chaikin. I'm going to throw it out right now so we can see it. Let's click on it, and this will be added at the bottom. Okay, I'll try that again. Click on it here. I'm going to use the standard number he's using, and we'll take a look at it right here. I know we're looking at Microsoft. We can look at a number of others. The whole idea here is to see over a period of time, do we see prices breaking out higher off the bottom or not? Now, this wasn't like a super, super early read over here. Okay. We started to get, for the first time in a little bit, I mean, right over here, that's a higher low. Okay. There was some consolidation in here because guess what was lagging a little bit? Money flow. But there's a way we could potentially use this across the board. And that is this. You've got RSI, you got money flow. Do you notice over here too that when you break off the bottom, what you'll find sometimes when it might be building up volume, strength, we don't dip below that zero line. We break up here, we hold, we hug that zero line. We didn't make new lows. Okay? We stopped making new lows. Okay? And as we began to make basically those higher lows are in that range, it's a form of a divergence because what was price doing over that time frame? Prices were lower low, lower low, lower low, and lower low. Now we got a lower high right there as well. But the money flow gave us some, Chaikin money flow specifically gave us some early indications of that occurring. Now we had also done a divergence on money flow itself or on balance volume. It's a very, very similar formula for each of these, but they can be leading in a sense. And notice over here with me, I mean, money flow, very clear, but you're getting combinations of the two. So does it have momentum and is volume being accumulated? Basically the Chaikin money flow in a nutshell. Okay, that one was a little interesting because you got that big gap under earnings, and I think the Chaikin money flow was doing really good until you got that massive gap. Let's look at some others. In fact, we could pull up, well, Meta's been really strong as well. But say, for example, how did Boeing do off the bottom? Okay, we had a major low over here. You can see the price reversal in Boeing. Was it being accumulated or not? Combinations of momentum, MOM for short, money flow down here, which is volume buying, maybe accumulation. We combine these two together, which is fascinating. Some people might just want a single line. Wow, that is a big dip. I mean, a big jump in terms of a higher low. A higher low, but price-wise, a clear lower low. So momentum, flow, or unbalanced volume, and you're getting that coming in right there. Now, I'm going to show you the scan that I put in here, and we'll look at that right now. In fact, yeah, here we go. So I'll pull it up, clear these guys off right now. But the scan itself is going to look in, let's say, for example, the S&P 500. I want to look at the NASDAQ first because I think there's been a lot of, with the economy kind of bouncing back, technology can lead the way in a lot of cases. So I'm going to go ahead and just load this guy up right now. We're going to just put it in right as the Chaikin money flow, and I've got it right there, Chaikin divergence. I went back on a 22-bar basis using exactly, well, not exactly, but a very, very, very similar code to the one we had on what we looked at previously, actually, on the price indicator for the advanced decline line. So there are a few different things going on, but these are some of the companies that are coming up and showing that divergence. Now, how is that, what is that divergence looking at? I'm looking at kind of a longer stretch of time. Remember, the Chaikin looks back 21 days. I went 22 days here. This is what it looks like right now, but I'm going to show you on the charts. We can really minimize this too, but like on the charts, let's pull up a few of these right now, and I'll show you what's going on. Oh, what the heck? Pepsi? Pepsi's all the way down here too. So is CrowdStrike. These are going to be interesting ones. I mean, in the sense that we're looking at, oh, wow. Now let's take these off for now because we explained them, but we're going to leave our Chaikin money flow on. Do you guys see any divergence developing? Do you see how the scan helped us pick up on that? Wow. What's going higher and what's going flat? You know what I'm going to do? I'm going to add in. Why not? TTM squeeze in here. That looks like price compression to me. Perhaps off a bottom, and it is. It is. Okay, yeah. Absolutely it is. In fact, let's just get this histogram out of the way. We'll keep both of these on here. Let's put these together. Look at that. We went right into price compression right down here. And what do you see happening behind the scenes? RSI showing relative strength, the momentum indication, and buying activity also coming in here. So right here, the combination of those two together as one are not showing distribution, but, well, like ACC for short. I'm not going to fit that in. Accumulation, according to the Chaikin money flow. Right here. Do you guys see it? Yeah. Something could be brewing with that guy right there. Now we have others in here too that I wanted to look at. But this is all about divergence. Okay. The whole thing is about divergence. And I'm going to show you guys a couple of different things on the Chaikin as we go through this. But let's look at some of the others. I wanted to really actually see over here too how, what was it? CrowdStrike. CrowdStrike had some news. And okay, so not too much here on this one, but okay, so this is just showing that there is growth in here, but there's also accumulation according to the Chaikin money flow relative to price action. In other words, because we're going higher here, this one's not as clear. I know that some of the defensive groups have been down, but this one's not as clear right here. What was another one we could look at? We could look at ROST. I think ROST has been actually up. Okay, whoa. So that did dip. So you see that that was not perfect there, but still showing possible accumulation. And what it tells me is, could there be a longer term possible move out of this base? I don't know. That's questionable, right? We don't know for sure what would happen on something like that. But you guys, this is the indicator put in place. And so I'm going to just, well, let's see. Oh, shoot, we're out of time here. But what I can do is just, well, let's just do this. Oh, I'm just going to pull it up and share it with you guys so you have it. But this is how it stands right now. You got the Chaikin money flow, and I'm looking over the past 22 days. You know, the minimum number of divergences have to be 3. We could ramp this up so there's substantially more divergences in there between price and the money or the Chaikin money flow itself. Okay, so let's do that. I'm gonna go ahead and just share that with you guys right now. We'll get that in the chat, folks. And I'm out of time, but it was good being here with you today. That went just like that, very, very quick. Hopefully, guys, you found use out of this. Hey, by the way, if you are finding use out of this, smash that like button. It really lets me know that you're getting value out of this today, folks. We did look at the TTM squeeze. We actually put a little trade on today. We're going to watch that. An expansion out of potentially a flag pattern. We took a look at the AD line, looked at indicators on the advanced decline line to give us a sense of divergence. And finally, we finished off with another divergence, but this time on the Chaikin money flow. So I'll pull that into the chat, folks. It's been good being with you. And I will catch you all next time. In fact, I'll just share that right now. So we got to get that out there to you guys. Okay, let's just share it. Share the scan query, and we're all set. Folks, have a terrific weekend. Thank you, Cam, very much for your help, as always, and see you all next time.